Welcome to the Momentum Flow podcast, where ideas, innovations, and experiences are shared to create a continuous stream of inspiration and insight. Join me, your host, Solana, a supply chain expert and investor, as I uncover how visionary founders, operators, and leaders are spotting opportunities, sparking innovation, and scaling profitable growth. From plan to cash, I bring real-world experience and an investor's eye to reveal how clarity, capital, and conviction fuel sustainable growth. Tune in and let's keep the momentum flow going. So today's conversation sits at the intersection of capital, execution, and technology. I'm joined by Mark Yeager, CEO of Redwood Logistics, who has also been a private equity advisor, bringing a rare dual lens across operating and investing. What makes the discussion timely is a simple but powerful shift. Whether public or private companies, asset-heavy or platform-driven, the market is rewarding one clear thing: consistent, scalable performance in an unstable world. Mark, great to have you here. Welcome to the Momentum Flow.
Thanks for having me, Luis.
It's a pleasure to have you, Mark. So to start, why don't you share a bit about your personal journey? You have your early days in Indiana University, Georgetown. You had a long stint at a public company like Hub Group. You were the CEO and board member there. And the last decade, you pivoted to the private sector with Redwood, and you had a tenure in advisory in the private equity world. So why don't you share a little bit about your journey?
Yeah, that certainly covers it. No question about that. I did go to Indiana and went on to Georgetown Law from there. Practiced law for a couple of years and came into the logistics space with Hub Group. As you may or may not know, my parents started the business back in 1971 in a single office with no windows and built the company from there. So I came back into the fold. I was with Hub for 23 years. A lot of different roles, everything from general counsel work to heading sales. My last position there was president and chief operating officer, and I was on the board of Hub Group as well. After that, I really wanted to do something more entrepreneurial. And I managed to find a private equity partner, CI Capital, and we set out on the path of building a $1 billion platform in the logistics space. And that was back in 2016. We purchased Redwood Logistics and brought it together with a company called Simplified Logistics in 2018. And it's really been a run ever since there. I am the CEO of Redwood Logistics and also sit on the board at this time. So it's been a great journey. It's been a fun journey. And it's been very interesting to see both the public and the private equity world firsthand.
Absolutely. I think, from really a family-owned business to public company to then private, it's definitely an interesting conversation. I'm sure we're going to have a great conversation. So why don't we start by you contrasting a little bit the two clear but different phases of your professional career, right? You've operated across public and private environments.
Yep.
What is fundamentally different between how supply chain strategy is shaped in a public company versus a private company?
Sure. I think there are many commonalities about developing and implementing and modifying strategy in those two environments because, you are both in the logistics space. But I will say I think there are really some very significant differences. And given my brothers, I have to say that when you talk about developing and implementing and modifying strategy, it's much easier in a private equity world than in a public company world. I think that the interface with a private equity partner is something that most folks are much more comfortable with. It's a dialogue. It's an ongoing discussion. In a good private equity relationship, there's alignment about how to create enterprise value. So, in my experience with our two private equity partners, CI Capital and then AEA, they were really helpful in helping us develop and implement and modify those, strategic choices, right? I think it's a very difficult world and a very different world in the public space. You just can't have that kind of dialogue that you get in a PE space as you get as you're trying to talk through strategy and especially trying to modify strategy in a public world.
So as an operator, which you were, so what do you think people really misunderstand that the public market pressure versus the private equity expectations, which tend to be higher on the returns and that, right?
Sure.
So where do people misunderstand, the operators misunderstand that difference?
Yeah, I think there's no doubt that both have high expectations, right? And there's a heavy price for failure. There's no question about that. But as an operator, I think that what a lot of people don't understand in coming into the public sector is how important it is to set expectations. And it really is, it's an art. And it really requires tremendous discipline and a lot of foresight and a certain amount of diplomacy as well. I will say that at Hub, when we came public, we were very entrepreneurial. It was a great company. And I think you always believe you're going to perform and you're always going to deliver. But in a public sector, there's really no room for aspiration, right? Unless you're Elon Musk. I think you really need to have a disciplined approach. You need to set expectations, and then you need to deliver on those expectations. You can have a great quarter, what feels like a great quarter in the public sector, but if you miss by a penny, the impact on the stock price can be profound. And so there's just such an importance to set and manage those expectations that I think a lot of folks who come from an operating background or who have built a company just don't understand how an important part of value creation that is in a public world.
So in both environments, I guess, there's you need to execute on a very disciplined way under pressure. So from your experience, any learning that you can share of executing under pressure?
Yeah, I mean, obviously, logistics is a space that's filled with pressure and filled with variability. There's no question about that, and I think that's been a constant, throughout my career. I do think that, in the public world, it's very important that you execute consistently. And that you're able to deliver and explain performance in a significant way that the public can understand. I think in a private equity world, the tendency under pressure is to potentially not be as forthright with your private equity partner, and that can create misalignment. And misalignment, is a death sentence, right? The tendency, I think, in a public world is in order to try under pressure to meet quarterly expectations, to get away from your operating disciplines and try to do things in order to, save the quarter, if you will. And that usually has negative ramifications as well. Both are a little different. The timing is just a little different as well. And I think the mistakes that people make, while well-intentioned, nonetheless, you can see it in a lot of public companies and you can see it in a lot of private equity companies, those two phenomena.
Now, as I hear you share your experiences, I hear hints of a convergence, right? Where public companies are acting faster, private companies are becoming more structured. Do you think there's really a hybrid model emerging?
Well, I hope so, right? I hope so. I think that's what we should all be aspiring for, right? I think that certainly at Redwood, that's what we're trying to do. Redwood has always been a very entrepreneurial company. And when I came in as CEO, the one thing I wanted to make sure we didn't lose was that entrepreneurial culture, that ability to be nimble, to be flexible, because I think that's more important now than it ever has been. Mm-hmm. And I think public companies are now seeing that as well. You need to have discipline, especially in a public world where consistency and predictability is so important. I think it's absolutely critical. At the same time, you can't become bureaucratic, right? You still have to be flexible. You have to be nimble, or you will fall behind the pace very, very quickly. And I think it's one of the biggest challenges that public companies have going forward is how do they become more nimble? And that's going to be an interesting challenge. And I think as companies in the private equity sector grow, they do need to develop those disciplines that are much more common in a public enterprise.
Yeah, no, I agree with you. I really think there's there's best practices from both, and
Yeah.
I think that convergence, creates value. But anyway, let's shift from who owns the business, which has been the
Yep.
conversation till now, on how the business really actually creates value, right? Because at the end, that's the model is really that model of creating value is evolving as fast, if not more, than just who owns the business. So
Yeah.
for years, advantage came from scaling assets, right? And nowadays, I would argue that platforms and orchestration are the new battleground. What's your take on that?
Yeah, I think that's fair to say. I think that's fair to say. I mean, look, I think there's always going to be value in assets, right? Because we are in a physical world and we're moving physical goods, and somebody ultimately has to move those goods, right? So it's very, very important. But I think that as the supply chain has become more complex, people have started to understand that it's about more than price. It's about more than securing capacity, right? You really do need to orchestrate all of these complex pieces, bring them all together so that they all work together. Because it's the weakest link in the chain. It just takes one area of failure, and the whole thing can really be massively disrupted. I think we certainly saw this during COVID. So I think that disruption, that lack of control that people experienced during COVID taught them that the supply chain needs to do more than just provide capacity. They really do need to orchestrate all those pieces for an outcome that provides competitive advantage for their business.
Yeah. Now, on the other side, how do you really distinguish a true logistic platform that is, it has assets at the end, from a company that is just layering technology into operations without value creation? How do
Yeah.
you discern that?
Yeah, I think there's a lot more of the latter than the former, right? To be honest with you. And I think we're especially seeing it with AI right now, right? The typical projects that folks are launching, I think really are very little more than layering AI on top of the business, right? And that isn't a bad thing. It does provide information, it provides market intelligence. But at the same time, it doesn't generate the kind of benefits that the technology really could if it's truly operating within a platform. And to me, the proof is in the pudding, right? And the real question is the technology embedded in the workflow, or is it separate? Are you in a workflow and then you jump into the technology and then you jump back out to the workflow? That's not embedded, right? That is not embedded. But I think it's much harder to embed technology into the workflow because the workflows need to be re-engineered. And a lot of customers and a lot of 3PLs for that matter really don't have necessarily the resources or the tools to make that happen in a very efficient manner. So I think we're getting there, but I think it's still the exception, not the rule.
At least my impression of Redwood is, you really have put effort on scaling those capabilities, as much as, if not more than scaling assets for the sake of doing it. Was there a moment that you realized that you said, "Hey, I need to do more this than less than the other," or?
Well, for sure, right? I mean, absolutely, and I think I had seen a little bit of that at Hub, but certainly, at Redwood, I think that the company started out as a brokerage, right? As a non-asset player, and long before I got there, they did what many non-asset players do, and they started a trucking company, and
Okay.
and the trucking company was fine, and it was well run, and it produced some value for our customers, but there just wasn't a lot of value in scaling it. If you added 10 drivers, you got 10 more loads a week, right? It was that kind of linear scale, I think. And so that investment, while it did produce some value, it was limited value. And if the markets shifted and demand fell off, then it became a liability. And that is somewhat inherent in the nature of assets, I think, right? Now, on the other hand, when we purchased a company called Eminent, which specialized in Oracle implementations, right? So we invested heavily in our integration capability, invested heavily in Redwood Connect, our no-code integration tool, and in capabilities that were expanded. What that did for us was it really opened up the entire Oracle ecosystem, the entire Oracle, customer base, to us as potential partners, right? So it wasn't a linear. It wasn't a linear growth. It was exponential in terms of the opportunity that unfolded because of investing in that unique capability. You just can't get that kind of a pop, in my mind, out of assets. But like I said before, there's still a lot of value in assets. I just think that the potential contribution and the risks are not nearly what you get when you're really building scale from a capability perspective.
So maybe just for context for the audience, so how would you define Redwood today? It's more asset driven, technology driven.
I would say we are technology driven. Absolutely. We think of ourselves as bringing technology and execution together, right? In a very unique way. We operate on an open ecosystem, right? So what it enables us to do is offer tremendous optionality to our customers and a lot of flexibility. At the same time, we're not just a tech play. We don't believe that tech is the answer. The real question is, what do you do with the technology, not what is the technology? We think that's the driver.
That's a perfect lead to my last question in this section, which is, what do you think companies mainly get that digital transformation wrong today?
Yeah, just that, I think, right? I think we see so many companies who invest in technology or who go out and buy a TMS. Most of our customers are using maybe 20% of a TMS capabilities, right? And how many big builds have you seen on the logistics side with large public companies or even startups that spend millions of dollars on technology and they really don't end up with much to show for it, right? To us, the big thing that you have to understand if you're going to try to digitize is that it's about more than the tech. There's a whole planning. There's a foundation that has to be built around data and tech structure. And then there's an even more laborious process of re-engineering the workflows so that you can truly become digitized. And I think too often people spend millions of dollars on a TMS, they don't see results and they don't understand why not. And that's because the foundation wasn't built and the work to really re-engineer the workflows wasn't done either, right? Not many customers or shippers or even 3PLs for that matter are equipped to do that work on their own.
Yeah, thanks for your insight. That's really insightful. So at the end, companies define themselves either asset driven with technology or technology driven with assets. But
Yeah.
once you define the model, you then, especially as a CEO, you have to actually transform it and evolve it, right? And that's really where capital and discipline come into play. So from your perspective, while you were the private equity environments linked to Redwood, what separates the companies that create real enterprise value from those that they're just growing? They're showing a top line growth, but are they really creating value? What is the difference?
Yeah, I mean, look, I think the growth is the easy part, right? How many times have we seen companies come into our space with this sort of theory of I'm going to grow to the point where I have scale, and then the scale is going to lead me to an industry leadership position. To be honest, I've never seen that argument work, right? I don't believe that's how you add value, going in and buying business. It's very, in a world of automated bidding, it's very easy to do. And it's very easy to lose a lot of money doing that and also add very little value, right? I think if you're selling a commodity, you have a weak value proposition, right? And I believe that companies with a weak value proposition don't create enterprise value either. The two go hand in hand. So from my perspective, when we're looking at businesses or when we're thinking about how is Redwood performing, what I want to see is how's the strength of our value proposition to our customers, right? And that means how many customers are coming on, how many customers are really compelled to become partners with us and willing to pay, to compensate us, for the value that we're creating, right? And so to me, a company that's creating enterprise value is bringing on new customers, and then they're expanding those relationships with those customers. It isn't a one and done. It isn't I just won it in a bid and I've got it for a year. It becomes a true partnership, and we call that land and expand. So we can start with a customer and a certain segment of our value proposition, and then really demonstrate and expand that position with them by bringing value to them, right? And as a result, I think that most of our customers come in and use multiple services over the course of time, and we're able to maintain very low attrition levels. So to me, a company that has low churn is developing, it has a very strong value proposition, and that value proposition translates into long-term enterprise value.
Yeah, that does make sense. Now, going back to your early stages in Redwood, right? You come to Redwood, private equity is involved. Obviously, private equity wants to create speed of change, right? That's the modus operandi private equity. So, but at the same time, it sometimes introduces risk. How did you manage that? What lessons did you learn from that?
Yeah, it's interesting for sure. I mean, typical private equity hold period is 3 to 5 years. Mm-hmm. And at the same time, they're looking for anywhere from a 2x to a 4x return. Mm-hmm. There's a lot that has to happen in 3 to 5 years to generate that kind of return. Yeah. There's absolutely no question about it. It can be a great thing. It can be a great thing because there's no time to waste. You really have to be productive. We have a saying, private equity never sleeps, right? I mean, it's a constant, it's a sprint, right? That does, I think, streamline decision making, and that's a very powerful thing, and it's very important, right? And it really, I think, creates an alignment that can also be extremely powerful. And so in that sense of urgency, I think can be very, very positive, especially as you're competing against typically slower moving enterprises that are more of a public persona. But at the same time, there is the risk that you don't necessarily be as thorough in some of that decision making as you otherwise could be, and I think that's the downside. You can get a little bit too rushed in your decision making, and you have to be able to balance both that need for urgency, at the same time that need for discipline.
So let me just go slightly on a tangent, because obviously you hinted about the different pace of public companies versus private equity backed companies, right? And that slowness, which is not necessarily slowness, I would say is more deliberate manage expectations. Sometimes it's a leadership choice, but it could also be kind of a comfort choice from leadership, right?
Sure.
Your take, and I'm not quoting Hub to be clear, but your take on what's your take on that? Because both, again, that convergence of models, I think it's a blessing in disguise. But what's your take?
Yeah, no, look, I would agree with that. I think there is a natural deliberateness to public entities, because there's such a value on hitting expectations. It's just so important. They don't want variability. There's just there's no place for that, right? So I do think that you end up being more deliberate in your strategy. There's more of an educational process with the public that has to take place. So I think shifting strategies is a little bit more difficult. And there's just a need for more discipline in the public space, because the cost of errors is significant, and it's truly an unforgiving place. So I think that public entities like deliberate decision making. They like deliberate executives, and executives that are institutional in nature, like public enterprises, right? So the two, I hope there's a convergence, right? I hope that there's the best executive is institutional, but also flexible and aggressive, right? It's hard to find both, but
I love that definition. I think there's value in both. So now, even with the right capital and strategy, execution at the end, even more today runs through one lever, which is technology, right? And there's more technology than ever in supply chain. You go to a trade show today, and it's even difficult to discern what's happening from technology perspective. So with all that technology, why are outcomes still so inconsistent, right? You have all this technology, but you see all kinds of results. What's your take on that?
Yeah, look, I think it goes back to the sort of previous point that it's not usually just a technology solution. I think that technology has enabled us to do some amazing things. It hasn't made our world any less complex. it's probably made our world more complex, right? There's more variables now. There's more choices. Our supply chains are inherently more complex now. So I think that you're in a world that has more moving places, more variables. The technology is helping in some regards, but at the same time, it is too often viewed as a panacea and as if it's going to generate results, improvements on its own. And that just isn't the case. I think you can look at so many instances of large technology builds that have great capabilities, seem like they're going to solve all kinds of problems, but don't deliver because the workflows weren't modified, because there wasn't the hard work to get the data infrastructure correct, all those things. And so really what you've got, I think, is progress being made, but at the same time, not enough to offset the additional complexities that are being inserted into the supply chain as it's evolved.
So now on technology, where do you see the biggest untapped opportunity to materially improve performance? Is there one area specific and maybe logistics specific, given that that's your area of expertise? So
Sure, yeah. I mean, that's my world, right? So that's what I would know about. Look, I think there's all kinds of opportunities. Our business is full of inefficiencies. Our business is full of black holes, if you will, right? So I think it's really exciting. I don't think there's ever been a more exciting time. There's never been more opportunity out there. Clearly, I think what a lot of people are talking about is process automation, and I think deploying AI to automate core processes, which is very exciting. I mean, we have seen significant improvements at Redwood from a productivity perspective through process automation. Last 4 years, we estimate about a 39% improvement in, for example, loads per day per dispatcher, right? Those kinds of things, right? So we are making real progress, and there's still literally that's the tip of the iceberg, right, in that regard. But what gets me, I think, more excited really is what can happen with better decision making, whether it's automated decision making or facilitated decision making, right? Like for me, my human costs are about 1/10 of my cost of purchase transportation. So for every 1% of purchase transportation cost that I can improve or reduce through better decision making, I would need to bring a 10% reduction in sort of headcount to equal that. So I love what we're doing in order to help all of our people and our customers make better decisions. So we're doing a lot on the pricing front. We're doing a lot on modeling. We're building digital twins that are going to enable us to replicate our customers' operating environment on an ongoing basis, so we can scenario test and we can try to figure out, okay, what's the right thing to do here? If we change this and we change that, I call it a what if machine. We make all these changes. What's the net impact on cost efficiency, on service efficiency, all those kinds of things? When technology can allow us to do that, when that's the kind of work that our people are doing instead of booking appointments, I think that the value creation is just almost limitless.
I love your pragmatic perspective that at the end technology needs to translate into execution, right? So which I fully agree. So it's not this irrelevant. So now, just recapping a little bit. So the ownership models are converging, platforms are rising, technology is everywhere, right? So what ultimately defines a winning supply chain organization?
Yeah, that's a good question. I mean, look, I think at the end of the day, everybody that's working in supply chain is trying to create competitive advantage, real value for the company, right? For the shipper, really trying to do more than just procure well, do more than secure capacity, right? I think really winning is working hand in glove with the business, right? And being able to offer optionality, to offer certainly deliver on the promises, right? There's a real heavy necessity for strong consistency, right? At the same time, I think there's a very real, the supply chains that win in the future are going to be very adaptable, are going to be very flexible, because we're going to be seeing lots of change. And I think we saw in COVID the limitations of many supply chains that lacked that. the supply chains that won were the supply chains that could adapt to a different and unforeseeable environment. And I think that that's going to be true in the future. Those are the supply chains that win, the ones that are really able to deliver competitive advantage under a variety of operating circumstances and change dynamics.
So I fully agree. But at the same time, we live in a very volatile world and network, right? And how do you scale that execution with this high level of volatility?
I think it is challenging, to be able to, scale. So to be able to deal with growth, right, and become better, right, not worse, and be able to deal with all of the variables that are constantly coming at you in that additional complexity. So to me, what we are real believers in integration, right? For us, we are an integration platform. We believe that you can't manage something that isn't integrated into your workflows and into your systems, right? And so we believe that the secret to scale and the secret to dealing with complex operating environments that are constantly changing is being deeply integrated with the business and deeply integrated with your partners, data sets, and the technologies that are out there that can help you deal with all of those variables. So that's where we start with all of this. And, from there, of course, you need to, in a highly complex world, you need to really think through your workflows, right? And really think about, how am I going to perform if I am 20% larger, 25% larger? Am I going to have to throw people at it? Or can I use technology to decouple, right? Between volume and workload on my human resources. And it's a challenge. I think there's no question about it. But I do think that there's that we're now at a place from a technology perspective where you can scale even in a highly complex world very effectively, and actually end up at the end of the day with that sort of data flywheel with a better service, with a more consistent execution capability than you did going in. And I think that's what we're all striving for.
Thank you. I think that's I love your response to this one. So we're coming to the end of our conversation, but one thing that I've gotten a lot of feedback about the part of this conversation that people enjoy a lot is when I'm able to get the human side of the people that I talk with and share their insights. So if you indulge me, I'll do a quick rapid fire Q&A just to share a little bit about that, and just to hear a bit about Mark Yeager, the guy, not the executive, right? So one capability every supply chain leader must build now.
Flexibility, right? I really think flexibility, right? I think it's absolutely the critical skill, and you just got to have it. And I think we can get too institutional in supply chain and too locked down, and that's just not the future, right? It's all about being able to adapt.
So I'm gonna give you two answers to the next one. So AI, is it overhyped or underutilized? Why?
Well, I'd say both, but I can't choose both, I suppose. Look, I would say underutilized right now. I mean, look, the hype cycle is crazy. I don't think I've ever seen anything with that kind of hype. At the same time, I don't think I've ever seen anything with this kind of potential. So I think if we look in 10 years, I don't think we'll feel like it was overhyped as much as we will look at how we were using AI and really consider it to be really so nascent, right? Like really so early stage. I think we'll be using AI in fundamentally different ways. It will be much more pervasive. And so I think in that sense, the level of utilization is going to be, exponential, right? Whereas, at some point, I think it'll come pretty close to hitting the hype cycle. So I've got to go with underutilized at this point.
Okay. So we talk about platform, we talk about assets. Which one creates more value over the next decade?
Well, so look, as I said before, I believe that assets create tremendous value because they are a part of the world. We're a platform company. I got to go with platform on that one for sure, because I think that really, these platforms get more and more valuable. They're producing more and more value as they grow and as they continue to become a part of the broader supply chain world, right? So to me, these platforms are still early stage, and the need for orchestration that these platforms can facilitate is going to really grow tremendously over the course of time, whereas assets will continue to be somewhat linear.
Maybe a last one, and I fully agree. I think at the end, over the next 10 years, probably platforms, but assets enabled for sure. So which is the biggest execution mistake you see repeating over and over again nowadays?
I think the biggest execution mistake we see is not building the foundation, right? That's really necessary, right? And we have, it's good for us because it's a core competency for us, but we see so many shippers who, even large sophisticated shippers who don't have, for example, harmonized data, right? And so they're really operating in multiple silos. They have a lot of data that they can't really use because it's apples to oranges, right? And so to me, the biggest mistake that we see is folks not building that foundation before they start, right? I mean, that's the work. You've got to have that foundation to innovate meaningfully. You've got to have that solid foundation across the entire organization, not broken out into silos.
Just to wrap it up, one last question, and I tend to ask everyone, all my guests, this question. Now, as I reflect on everything we discussed today, so converging of public and private models, the shift towards platforms, the role of technology and capital, what is one belief or mindset shift that leaders must adopt or strengthen now to successfully navigate the transformational momentum that we're living in the supply chain space?
Well, that's a great question. I mean, there are many challenges. I think there's no doubt about that. To me, what really everyone should be mindful of is, are they building an organization that can embrace change, right? An organization that can recognize where issues are occurring and work in a constructive way to improve, right? To get better, to bring on new technology, to bring on new partners. The good performance of today isn't going to be good enough tomorrow, right? And so I think we all have to be ready for a pace and level of change that we haven't seen in our careers. And our organizations need to be capable and eager to undertake that kind of change, because I think that it's coming, and the people that win are the people that are going to be able to adapt to that.
I had to ask, one last question. I hear your energy and your passion on the topic and the discussion over the last few minutes, and what keeps your momentum going all this time? Obviously you have a lot of energy. So what keeps you going, you personally?
Well, I love it. I mean, I love the business. I love our team. We have this amazing team at Redwood. They're very innovative. They're high energy. They're fun. I love our customers. I love the fact that we're solving problems. So to me, I've been in the business now for, I guess, 34 years, something like that, and it's always been full of challenges, but full of great people, and it's interesting intellectually. I just, to me, it's such an enjoyable part of my life, right? That I look forward to going to work. It's not a problem. So
that's awesome. As I reflect on the conversation, right? One powerful reality comes to mind. The industry may debate public or private, assets or platform, technology, operations. But at the end, the real differentiator is probably simpler, right? It's the ability to execute consistently, at scale, under pressure. And the future won't belong to one model. I think we discussed it. It will belong to those that can integrate some discipline from the public markets, the agility of private markets, and the power of platform-driven ecosystems, right? At the end, supply chains are not just infrastructure. They are, from my perspective, the performance engine of companies. So I just had to say thank you for joining us, Mark. I appreciate it was a pleasure having you. I'll give you the last word if you want to have any final remarks.
Oh, I would just say thank you very much for having me. It's been great. I really enjoyed it, and appreciate the opportunity to talk about Redwood and talk about the industry. And thank you for having me.
Thanks for joining. I appreciate it. So, to our listeners, if you enjoyed this episode, please subscribe, share with fellow operators, innovators, and leaders across the supply chain ecosystem. I'm Luis Solana, and this is the Momentum Flow, where clarity, capital, and conviction keep supply chains and leaders moving forward. Until next time, stay curious, stay connected, and keep the momentum flowing. Thank you.